Welcome to this deep dive. Today's mission is unpacking a rather dense corporate press release that, well, it actually signals a massive shift in the global financial landscape. We're looking at documents straight from TransUnion, translating the corporate speak so you can see exactly why this matters to the future of global commerce.
Right, it is quite a substantial document, but beneath the surface numbers, what we are really looking at is a major consolidation of data and financial infrastructure.
Okay, let's unpack this. The core of the deal is that TransUnion is buying majority ownership in the consumer credit business of Buró de Crédito down in Mexico. They're taking their current stake, which is, sitting around 26%, and pushing it all the way up to roughly 94%.
Exactly, and they aren't getting that kind of controlling stake for cheap. The price tag for this jump is approximately 560 million US dollars.
Wow, 560 million. So they aren't just partnering anymore, they are completely taking the wheel. But why this specific company and why right now?
What's fascinating here is that this isn't some sudden out-of-the-blue corporate raid. TransUnion has actually been sitting on Buró de Crédito's board of directors for over 2 decades.
Wait, 20 years?
Over 20 years. And they already serve as one of their key technology providers. So this is really the culmination of a very long-term relationship, taking a minority investment and elevating it. Also, just to be precise with the source material, the commercial credit business of Buró de Crédito is excluded from this transaction.
Right, so we are just talking about the consumer side.
Exactly, just the consumer side.
Got it. And here's where it gets really interesting for me. Dropping $500 million shows a lot of confidence in the Mexican market. Why are the numbers looking so good to them?
Well, look at the broader economy. Mexico is the 12th largest economy globally right now, and the second largest in Latin America. They have this booming, emerging middle class. Just to give you a sense of the momentum, between 2013 and 2023, credit penetration jumped from 34% to 42% of their GDP.
That's a significant leap for a single decade.
It really is. Today, over half of Mexican adults use at least one financial product. So the market is just primed for incredible growth.
So how does this connect back to you, the listener, especially if you don't happen to live or do business in Mexico?
It comes down to a global push for financial inclusion. TransUnion wants to use this acquisition to introduce what they call trended and alternative credit data.
Okay, let's translate that for a second. Alternative credit data. What does that actually look like in the real world?
Great question. Imagine a small business owner in Mexico City who does almost everything in cash. They want to expand, but a traditional bank won't touch them because they don't have a standard credit card history. Alternative credit data means looking at whether they pay their cell phone or utility bills on time.
So it captures everyday financial responsibility that the old systems just completely ignored.
Precisely. It's a game changer for people who have never had a formal bank account. They're also bringing in advanced fraud mitigation, which basically means better tech to catch scammers, and they plan to expand beyond traditional banking into fintech and insurance.
So, what does this all mean when we distill the key takeaways? Assuming all the regulatory approvals clear, this deal is expected to officially close by the end of 2025.
And to understand the scale of what they just bought, the target acquisition generated an estimated $145 million in revenue in 2024 alone.
That's substantial. Ultimately, this move aims to make TransUnion the undisputed largest credit bureau in Spanish-speaking Latin America.
If we connect this to the bigger picture, what we're looking at is a proven corporate playbook. TransUnion operates in over 30 countries. They use this strategy to scale internationally by building the underlying digital plumbing. They want to be the engine that lets consumers and businesses transact with confidence every single day.
It really is a foundational infrastructure play, and as we wrap up, it leaves us with something pretty fascinating to ponder.
It does. This raises an important question for you to explore on your own. As credit bureaus increasingly rely on alternative credit data and expand deeply into fintech to drive financial inclusion, how might these non-traditional data points fundamentally redefine what it means to be creditworthy in our modern global economy?